You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means the option block is back. Our train, our bi-weekly train, is pulling back into the station. So make sure you hop on board. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. You know, we're excited to be back. They forced us to take Monday off, those darn holidays. There's just nothing you could do about them, unfortunately. We all needed a bit of a talking break anyway, so I apologize for all of you who tune in on Monday. You're like, where's my bi-weekly dose of all things option block? But we had you covered with a nice little best of to keep your feed active for you. Now we're back just a week later to break down all things options for you. Of course, you can always join us live every Monday, usually, and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. Grab that link, set it, and forget it, and you're good to go. Whenever we go live, not just with this show, but of course, for the Palooza, that is our show programming on Fridays, that is VolViews, that is TWIFO, that is, of course, throughout the week when we also do some of our live interviews and all the other fun stuff that we do on the old network. So that link is your key to the live, and then, of course, you can always just grab all of the podcasts, pretty much wherever you get your favorite podcast programs. You can survive. You can also survive. You can also subscribe individually if that's your bag, or if you want to go for the whole kit and caboodle. The network feed is the easiest place to go. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, all sorts of fun stuff. We actually do enjoy hearing from you guys on occasion, once or twice. All right, let's welcome on my other cohorts here. My partners in crime. Let's start off. He's back in good old St. Charles, Illinois, where he belongs. Never leave again, sir. Good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, and I know you're jonesing for your option block fix. It's been a whole week. How you doing, sir?
Oh, I am doing great. The option block is one of the best things in this business, quite frankly. I love it. Can't wait, and it's a really good show, I think.
I kind of like it, 600 or so episodes in. It's growing on me. The first 200 episodes, wasn't quite sure. After, about that, kind of liked it. All right, and also joining us, one of our stalwart, rotating cohorts of guests. He's been on quite a bit. He comes pre-packaged with a nickname, so I don't have to do any work there. He is good old Matt Tubby Benson, a.k.a. the options man about town, a.k.a. Tub, T-U-B from the SIBO. Mr. Tubby, welcome back to the program, sir. It has been too long.
It's nice to be back, Mark. Thanks for having me back.
Always got room for the Tubinator. See how I can twist it? The Tubinator. See, we can go a lot of different directions with that TUB. We'll be joined by the Greasy Meatball in a second. They're kind of a package deal. Whenever the Tub shows up, the Meatball usually not far behind. In the meantime, though, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what's been trading. We've been off for a week, so we got a lot to catch up on and gab on here. Let's start off today. Of course, we are streaming it live and recording it right around 3 p.m. Central, 4 p.m. Eastern, so Most of the major art markets pretty much shutting down or have shut down already. And so interesting day. Most of the major indices closing off slightly down, slightly in the red on the day, off about 1/4 percentage point, a little bit less. Pretty much across the board, S&P, NASDAQ, and Dow. That's first time in a while we've seen that. Usually it's been, one of these indices is usually moving a little bit more extreme than the others. Today, bit of lockstep. All of them off pretty much 0.2%. Pretty much across the board. And VIX cash still struggling to break back into the old double digits, still flirting with single digit levels, closing right around 9.98 after having gotten as high intraday as 1033. So it got there for a little while, couldn't sustain it, got as low on the downside as 965. So VIX cash still a little capricious, still can't make up its mind where it wants to go, what it wants to do, if it wants to be a big boy or if it wants to hang out in the single digits here. Perhaps we'll find out tomorrow. Perhaps we'll find out next week. It's always part of the fun. That is the crystal ball on the old vol views as well. So make sure you tune in for that and see how we embarrass ourselves weekly on the old vol views show. All right, let's kick it off. Mr. Uncle Mike, it's been a week. A lot's been popping off. I have a gold trade I want to run down with you in a little bit. But before we get to that, what's been catching your eye, sir, this week?
Well, I mean, when we were looking at it, we did actually make a new all-time high today. I'm not going to say my bit today because we just made it by 1 penny in SPY, and that's hardly worth it for me to say such a thing. But for the most part, over the last week, not a lot's happened in terms of S&P movement. A couple things that are catching my eye lately. Silver has been on a tear over the course of the last week or so. So we have had that. Now, granted, it's coming off of getting the crap kicked out of it over the course of the last few weeks, but it has come up quite a bit over the course of the last few days, so we have that going on. Oil seems to be at its magnet number of 50. We have Apple coming up a little bit from its lows recently. We also have, just going through a few of the stocks that we have in the strategic night with that type of thing, we have the financials are one of note. We had a lot of earnings that have come out on that. With JP Morgan in particular, JP Morgan is actually down 88 cents on the day. In the strategic and the triple income strategy, we do own JP Morgan. We're short the October 96 covered calls, so they were in the money, but they're now out of the money slightly at this point in time. So we have stuff going on, but we don't have a lot of significant movement in anything to speak of right now. This is kind of a challenging market if you're a premium seller, but I would like to encourage everybody, if you are a premium seller, there's things with which you can do to modify what you typically do. We talked about on the strategy block, I believe 3 weeks ago, if I'm not mistaken. So keep at it, keep doing what you're doing, but just modify it a little bit. In terms of where we might be heading, there's still a lot of macro events going on right now, and I hate to sound like a broken record, but the market just doesn't seem to care. I think I've said it before on this show. I remember what I used to tell clients, if I'd have a new client, I'd always say, okay, I'm going to invest your money tomorrow or whenever the money would be cleared. I'll get your money working tomorrow. Well, of course, unless there's like threat of a nuclear war or something that happens overnight, but I can't really say that anymore because we have that, and the market still doesn't really seem to care. So this is like a market for the millennials, and that I don't care, whatever. That's kind of what it feels like at this stage.
Ugh, a market for the millennials. That sounds all kinds of wrong. But before we get into that, we'll move on to some other areas that have been catching our eye. I know, Mr. Tubbinator. You've been in your capricious spare time now that you're a retired person. Before you joined ARP, you've been looking at a lot of interesting trades. I know you're looking at Ford last week. I know you've been looking at a lot of the shippers, FedEx and UPS, in the wake of the will they, won't they dance with Amazon. I know you also like I think ARNC has also been on your radar. So what's been on your radar this past week, sir, and even today here in the old Tubby screens?
Well, ARNC definitely picked my attention yesterday. It was a big buyer of OCT28 calls, which actually expires before their earnings are due on Monday. And I have not heard of this, the symbol, but it's obviously an Alcoa. It's Alcoa now after they spun off some pieces, so it makes a little bit more sense. But this is a pretty, pretty liquid stock. And when you dig into it, I found Elliott Management is the largest shareholder in the name. I kind of thought, well, maybe we'll take a flyer on this. Pete and John Nigerian have been talking it up yesterday. There have been rumors of takeovers on Twitter. And then today, and I looked at Act 20, I'm like, well, maybe I'll buy some November options. And I'm like, they're pricing in earnings. So the Nov 28 calls are 3 times as expensive as this Act 1. Let's see what they're doing here. And lo and behold, this afternoon, paper comes in and buys the Nov 30 calls, 5,000 times for 43 and 44 cents. And a little bit more Act 28 call buying as well. So interested to kind of see what's going on there when you this isn't an odd name that came out of nowhere that just someone might be playing. This is a big company, and you've got to start wondering, in this field of making airplanes and cars and things like that, does this play into the Amazon game? Does this play into Tesla potentially, with Morgan Stanley talking about SpaceX? And so it's an interesting game to kind of play with a lot of that stuff. And the other one that caught my eye today was an old stock that we used to trade heavily in the 90s, and I hadn't really followed in a while, was AMAT. So a lot of stuff going on there. It's a big call buying across the board in that name. But I think that was something you want to talk about later.
We got AMAT on our odd block in a little bit. You're right. That name kind of was a little bit of a blast from the past for me, too. AMAT used to be a big player, big name over there in the go-go.com 90s over there on the SIBO. These days, not so much. I can't remember the last time we talked about AMAT on the odd block, certainly. It's been a while. So nice to see them back in the rotation. We'll get to what was happening out there in a little bit. But first, let's see. Yes, I think we got him. The greasiest of meatballs, Mr. Mark Sebastian. Welcome back to the show, sir. I know it's been a week. You've been off. You're probably just chomping at the bit to talk some options. What was catching your eye in today's activity, sir?
Yeah, lots of crazy stuff. Interesting that we talk about AMAT. That one hit 2 different scans of ours. We have a new service called the Breakout Bulletin at Option Pit, and we were trading AMAT actually yesterday. Then we looked at it from an unusual options activity that we're going to talk about, and we were interested in trading it again. It was a crazy one. How about Amazon back above $1,000? I thought that thing was dead in the water, and it just booms back. That was one that I'd been playing with over the last couple of days. And I'll tell you, what is shocking is the way they have just said, one of the things we were talking about, and we'll hit this in a lot more detail during Vol Views tomorrow, but VIX futures had this really wide spread between VIX and VIX and the VIX cash and the VIX futures. Now, with the Fed minutes out and what's going on, they have allowed, with the VIX at 9, for the November future to trade below 12. So they basically have said, you know what? This is the new normal. 9 is the new 14. And we're going to trade VIX futures at about a 2-point premium with 30 days to expire, whether VIX is 9, 9.5, or 11 or 13. So I am just kind of crazy. It's kind of crazy the way that the term structure has said, you know what, this is normal. And then the other thing that really shocks me is what is going on with December, that option premiums are so cheap in December. It is like free hedging from the internet in December right now. It's like Matthew Lesko is shooting out the options chain for SPX December options. December options are so inexpensive right now on a relative scale. I know that we like that whole seasonality trade, but when was the last time the seasonality trade worked? I want to say it's been 4 or 5 years since the seasonality trade worked. So that was some of the things that were really affecting me. The other one, of course, the financials. JP Morgan and Citigroup made a nice move today, and that was they had great earnings and then sold off small on it, and that's probably bullish for those names over the next few weeks, even if it's not bullish as of today. So those were kind of the major themes I saw in the markets today. There's just volatility cannot hold a bid right now. It is completely unable to do so. And I think that's kind of the lesson of the day, is that there is Right now, volatility is no bid at 9.5.
Nice wide market out there for the old vol. Speaking of things that can't hold a bid, at least last few sessions, it was looking pretty strong earlier, though, is, of course, Roku, ticker symbol, Roku, R-O-K-U. They, of course, IPO'd a few weeks ago, and they went listed the options last week, so we're getting that turnaround down to about a week. A lot of you have been asking, hey, what's going on with Roku? How is it doing? So we thought we'd pull some numbers and see exactly how much interest there is, because there's always a lot of interest. People asking us on this show, when's Roku going to list, how are the options doing? Let's see if you guys are actually trading them up. And so far, with just about almost a week under our belts here, doing decent numbers. It's not blowing the doors out. It's not like a Facebook or anything like that, but it's doing all right. The average volume out there is about 4,400 contracts so far. OI is actually decently substantial, about 12,800. So again, not blowing the doors off, not doing 100K a day or anything like that, but it's something. When you got a new name listed out there that gets a little bit of action, that at least is worthy of note in this universe where pretty much less than 20 names account for roughly half of all the volume at any given day. We could use a few more names putting up some numbers. The Roku's not there yet, but it's on it's the distant side of the other 50%, but it'll get there perhaps with a little bit of time and some patience. Today, the numbers were pretty much heavy for the puts, about 2-to-1 puts over calls. OI actually is not quite as put heavy as you might expect. These things always list, the puts are always rich. People get attracted and into these puts. People are also rushing to get short using the puts because the stock, go figure, kind of hard to borrow. So yeah, the puts are actually not as heavy as we thought. Only about 1.2-to-1 puts over calls, about 7,000 open on the puts, and about 5,700 or so, 5,800 open on the old calls. In terms of what's lighting it up, number one positions out there, they're all pretty small, all sub 1,000. Number one with the bullet, actually the Jan 30s. Which is kind of interesting. So they said the stock today closing about 23.63. So someone still at least keeping hope alive for a little bit more upside, even though this thing has been kind of off to the races. Remember, it pretty much almost doubled post IPO. And number two, right behind it, the Jan 20 puts, about 750 on the Jan 30s, 730 on the Jan 20s. A lot of Jan paper, Jan 24 puts. The third, 675. You got to go, out to get Nove is number 4, 522 of the Nove 25s, and number 5 is the OC 23 half puts with a little bit shy of 500 contracts out there. So Roku, at least so far, not lighting it up, but not quite as perhaps as we expected as well, where usually these things list and it's all puts all the time. These days, a little bit of a diverse paper. You got some in the top 10, you got a lot of OC in there, you got some weeklies. So an interesting smattering of folks. I don't know, Mark, anybody of your crazies in your chat, any of them trading up Roku or interested in it, or are they kind of just watching and waiting?
Well, this is one we were looking at. It's got a pretty nice positive term structure where there is pretty heavy demand for near-term options as, obviously the stock is moving around. But as you move further back, implied volatility falls off, as much as 25 points. So it looks like the long-term expectation is that this is going to end up being at least for the time being, somewhere around a 50 vol stock and not so somewhere, settling somewhere in between kind of a Tesla and a biotech, at least in the near term. Before I think eventually this thing ends up pricing very Tesla-like as people kind of trade around it and figure out, what the upside is for this cord-cutting service.
It's funny that, this thing has taken off, and usually when you see a name list immediately after an IPO, usually it's put heavy to begin with. This thing has already had pretty much doubled since its IPO, so you thought that would also drive a lot of hedging or speculative downside activity, but it's been a little mixed, which is perhaps good news for some of the fans out there. Thought it'd be all puts all the time, thought this thing was going to be getting the bears would be coming out with their claws. Is a little bit mixed, which is kind of interesting. Speaking of interesting, before we roll out of the old trading block, there's one I wanted to bring to your attention, Uncle Mike. It came up in the middle of our TWIFO show last week, and I thought it was a misprint. I thought our data got screwy for a second there. It just did not seem correct. You've been on that show. We talk a lot of gold on that show, and we were in the middle of doing that again last week. Futures printing around 1275 last Friday when we saw this trade come in, and it kind of blew our doors off. We thought it looked wrong. So yeah, we're talking right now 1275 in the futures. Obviously, we're in October 2017, but the biggest trade of the week was actually all the way out in Dees 2018 last week. That in and of itself is not strange. We see a lot of long-term plays in gold, but usually it might be 1,300, 1,400 calls, something like that, 1,100 puts, and things that are maybe a little bit, outlandish, but not crazy. But this one certainly qualifies as the latter. So put your listening pants on, Uncle Mike. We saw paper coming in. First off, they bought 7,500 of the Dees 2000s in 2018. And that's crazy, but in and of itself, not super crazy. But that in and of itself usually qualifies as a little bit, shall we say, optimistic, a little bit gold buggy out there. And then they turned around and sold 7,500 of the Dees 2600 calls again in 2018. So already you got a kind of a funky, weird vertical. Why pick that? Why get that optimistic? Why even sell those calls? But the best part, my favorite part, comes after that. They decided, you know what? And I have to dig to make sure. We got some conflicting reports on this, but I'm pretty sure they bought this third leg. There was a third leg to this. And it was the Dees 2018, 3,000 calls. Yes, 3,000. I said that with the futures at 1275. They came in and loaded up on 15,000 of the Dees 3,000 calls expiring in 2018. So they got a nice little vertical. And then as it looks like they decided, you know, what if this is not outlandish enough? What if it explodes north of 3,000? We got to get more. We got to get 2x on that strike in case it goes to 3,500 by the end of next year. So what you guess you got here, a nice, good old-fashioned apocalypse type trade, I would suppose. Uncle Mike, first off, was this you? And then secondly, I know you're a bit of a gold bug, but I don't think even you are this outlandish on gold.
I wish I could sling that kind of size and not care about it, but so he actually bought the 3,000 calls then, because I have on the email you'd sent me that he had sold them.
Yeah, that's a mystery. I'm pretty sure he bought those. So it looks like I'll get more data on this tomorrow exactly, but it looks like they went up as a buy.
Okay, got it. Yeah, that's kind of one to where it would be that's a modified call spread, out of the money call stupid in a way, in terms of how it's looking at it. That one, when you had emailed that one to us last week, when you just got the information on it, I looked at it and I kind of had to chuckle on that one. The first spread, like you had said, the 2,000, 2,600, that one, it's kind of optimistic, but it's not out of the realm of reality, in that if we do have some crazy things happening, gold can rally very quickly. If given the right circumstances. But buying the 15,000 on the 3,000 calls, that's pretty bullish. And I guess the guy really thinks gold's going to go up. That's about all I can say to that one. But that's about as bullish as that's the most bullish gold trade I think I've ever seen.
Yeah, that definitely falls into my crazy. Probably up there with my crazy trades of the year. We might have a short list front runner here. Certainly for gold trade of the year. I just love the mindset that says, if that is indeed how it went up, this vertical is outlandish, but it's not outlandish enough. What if this thing really takes off? I need to have 2x on the upside. I'd love all aspects of that trade. It is fantastic. Fantastically crazy. We talk about the gold bugs. They're out there. They resemble the hardcore Apple zealots from a few years ago, but if anything, they're super hardcore, even more hardcore than those guys. This guy certainly qualifies as one of those out there. Let us know your thoughts on that one. I think we'll get more into the detail. I know Nick and the Quick Strike team have been digging into that, so we'll probably get more into the details of that tomorrow. I just had to bring it up because I know you're such a crazy gold bug, Uncle Mike. All right, now with the team assembled, not quite as crazy as this guy, but crazy enough. All right, let's keep on rolling. And some other weird paper we saw. This time today, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
From funky gold trades, we move on into the other funky trades that we're catching our eye here. Yes, it's time for the Odd Block. Let's kick it off here, as we are wont to do. Yep, paper keeps printing these catastrophe puts. They're creeping up. People keep saying, what if it's a 1x2? What if it's this? Wasn't it that? Nope, it's just a lot of little paper coming in time and again, day after day. Today's kind of light. Only 25 of these Jan 2019 50 puts lighting it up. But guess what? The OI is already up now over 30,000 on this strike. Just broke 30,000 recently. So there you go. We need to have a little party with little hats. When we started watching this thing, it was in the mid to low 20,000 in terms of OI. So it's gained a substantial amount of OI just in the past few months. So everyone out there thinking, oh, well, this is clearly a ratio or something else like that. No, it's just a lot of paper slowly clumbing into this strike day after day, week after week. A few hundred here, 50, 25 here, and it adds up over time. 30,000 open. So there you go. The love continues here for these crazy catastrophe puts. Let's move on to some other interesting paper we saw at Caught Our Eye today. We kick things off. I'm trying to think. I don't think we've ever broken this one down on the old odd block before. It's because it doesn't really usually do a ton of paper, at least not to the numbers we're looking at. We're talking about XSP. This is, you may not be that familiar with this one because, like I said, we haven't talked about it a lot. This is the mini SPX, 1/10 SPX, aka XSP. Easy for me to say. Closing today, as you might imagine, 255. This thing does about 11,000 contracts a day, almost 12,000. Today, doing about 105,000, so quite a bit more. 282 to 1 puts over calls today, so a lot of action out here in the old puts. You may be saying to yourself, wait a minute, 1/10 SPX, I already got something like that. It's called SPY. Why would I trade this thing? Well, a couple of things. Obviously, SPX has a lot of advantages. You got the European, you got the PM settlement, and you got the old tax treatment, the 1256 treatment. And you got that, guess what? You got that on the mini SPX as well. So if you're out there and you like that favorable 60/40 tax treatment, maybe XP, I keep wanting to say an XPX. XSP is the name for you. What we saw today looks like a pretty sizable, juicy, meaty put roll out there. In particular, it was the OC 236 that first came across our desk here, lighting it up to the tune of about 43,000 and change in one block. The total on the day is almost 51,000. And then we saw OI, pretty substantial, about 59,000 on this strike. So it has the whiff, the air of closing about it. Then we saw a lot of more paper piling in to the NOV, not the regular NOV, the weeklies expiring on the 10th, 250 puts. So maybe closing out on the 236s and then rolling back in and up, or out and up, I should say, to these NOV weeklies. So we saw two blocks of about 21,000 and change, so right about pretty much even with the 43,000 they started off with originally. They did those on splits. A total of 51,000 actually going up on this strike. OI is pretty much negligible. So it looks like they're coming in, lifting or getting close to on these NOV puts, crushing out the OC puts. All the trademarks of a nice little roll out here. Which is kind of interesting in and of itself. Again, XSP, interesting name. We don't really get to talk about this one a lot. So if you like your different varieties of S&P 500, you got this bad boy too. Again, not quite as deep and liquid perhaps as good old SPY, but then again, these are smaller contracts. So bear that in mind in terms of big S&P. Still a lot of meat on these bones. Let's look at, obviously, what the S&P's been doing over the past year. Pretty much a nice slow ride to the upside with some spurts faster to the upside. Let's start with Mr. Meatball. What are you thinking? You like this roll? And also some of the timing's kind of weird. Usually you see a monthly, they roll out to another monthly. This guy deciding to keep it in the weeklies in Nov. You like these? And also, do you ever use XSP?
I do not, but my dog hates them.
I think your dog likes it.
Yeah, my dog does not like XSP at all. It could have to do with timing. One of the nice things about having weeklies is the ability to time things. And that is probably what's going on here. It's just the duration. Tell him he'll come out. He can't do it today. The duration of kind of the trade is maybe set around earnings season. It could be set around non-farm payrolls. The guy could have something very specific he's trying to plan around, and maybe that's why he picked a different time. I get why most people that do monthly stick to monthlies, but one of the nice things about the weeklies is the ability to be. And this is why I think weeklies and dailies have kind of taken over trading so much. It's the ability to really customize when you want to hedge for, what days, what times, and durations.
Mr. Uncle Mike, I know you're not so much this trade, but I think you like a little bit of XSP every now and then. Why would you use XSP versus good old SPY, sir?
Well, I don't. And that's kind of what I like the concept. I shouldn't say never. I have used it at times in the past, but it's just kind of just like maybe I played around with doing like a 1 lot or a 2 lot in my personal account, I believe. But I wish that XSP, I wish that like we could have, I wish it would have the same liquidity that SPY options would, just for the reason that if you could get the 1256 tax treatment and if you could get the European type of settlement, and have it work the same way as SPX does, electronically traded, I'd like it to work personally, because I have some clients to where they're doing maybe a 1 or a 2 lot on SPY at times, and then the client within the same trade is doing like an 80 lot or something like that on SPY, and the trade will add up to 600, 1,200 contracts or whatever the case may be, but I have to use SPY just because I need the customization feature, because different accounts are different sizes and I need it to be at that level. Now, vast majority of my trading on that is done in IRAs, so the tax treatment really isn't that much of an issue for me in general, but I would like to take this opportunity to tell the whole world, start trading XSP and make it just as liquid and make it just work just as well as SPY would, and I'd really appreciate that if the whole world would start doing that. But the reason that I don't know if they will is because of the fact that people that are really concerned with tax treatment typically have large enough accounts to where they just say, the heck with it, I'm just doing SPX. So I don't know if it's ever going to really get more liquid than it is, but if it ever would, I'm the one niche of the world that would really appreciate if it would.
Yeah, it's kind of a weird hybrid product. On the one hand, you want people who have a little bit smaller size, but on the other hand, they obviously have to have enough capital at least to be savvy on the tax benefits of trading it. So it is a bit of a weird subset of a subset there. But I'm with you. I'd like to see this product do a little bit more, if for no other reason, to have a little bit more alternatives out there to what you can trade. So we're all big fans here of deep and liquid products across the board. Meanwhile, let's get on to the other name that was really catching a lot of people's attention today. I know Tubby was bringing it up. Mark said he was hitting up the chat room as well. This is our old friend AMAT, Applied Materials Inc. Ticker symbol, of course, AMAT. Closing today, $53.31. Pretty much unched on the day. It wasn't the underlying movement that drove a lot of it, even though it did have a bit of a range, about $1 and change. Also doing decent paper today. Things averages about 24,000. Today, doing a little more than 4x that, doing about 110,000 in there. About 7.5 to 1 calls over puts out here. And as Tubby alluded to, it was kind of a weird call palooza out here. Kind of pick your poison. It started off in the morning with a big print of the OC doubles, aka the OC 55s, going up, looks like paper gobbling up those. In the morning, around for 34 cents, about 8,600 and change of those. Then a couple hours later, we saw a pretty sizable NOV vertical going up out there, also for similar size, which makes it kind of interesting, about 8,200 of these. Looks like paper coming in, selling the NOV, again, the weeklies, expiring Nov 10th, 52.5 calls for 255, and then turning around and buying the NOV doubles, again, same expiration, Nov 10th, doing that for $1.35, so doing the whole thing for $1.20, and doing that again, 8,200 times 11,000 open on the NOV 52 half, so it looks like it might have been a close and a roll up, not much to speak of on the NOV doubles, so that's clearly opening there, or it could be piling on as well. And if that wasn't enough call love, we also saw more NOV calls printing a little bit after that. We saw the NOV 57 halves also going up and in a big sweep with about 5,000 printing for $1 and a penny out there. Again, these are kind of went up out of sequence, so they were actually above the offer by the time they went up. And that wasn't the end of it. There were scattered smaller blocks of OC and NOV calls kind of going up, just kind of scattered throughout the day. So kind of call palooza. Pick your poison out here if you like to call in NOV and OC. Chances are it printed. Those are some of the big size ones. This thing's kind of had an interesting trajectory over the past year, trading as low as into the high, mid to high 20s back about a year ago. It kind of has been on an upward trajectory ever since, closing right around near the highs today, 53 and change. Let's start with the Tubbinator. Tub, I know you used to fill a lot of paper in AMAT back in the day. Probably was nice for you to see it popping up on the old radar again today. What's your thoughts here on this kind of just crazy, but also kind of scattered call palooza going on throughout the day?
Well, my take, and this is not a recommendation under any circumstance. But this looks like back in the day where you would have some sort of takeover rumor going around. This probably lends itself more to the how now type paper we would have had back in the day. It's weird to see all these strikes being taken and a lot of them being swept. That just tells me that people are coming for it, and it's really odd. This stock's up almost 300% in the last year and a half. And at all-time highs, you get breakout option volume like this. There's nothing I see. There's nothing I know about any rumor. You don't see anything on Twitter. But just the way the paper goes across the board like that, something up with this stock.
Yeah, well, we've seen a lot of the old boring names get really hot again. Look at Intel. It's all of this kind of chip making and these old technology names. We're entering like a new generation of chips and computer technology and AI that is going to be due for maybe a lot of these chip makers and these chip parts makers and the guys involved in the computer business. It's going to be it's going to feel a lot, or at least it's starting to trade that way. It's feeling like a mature version of the kind of computer.com boom. That look at what's gone on with NVIDIA. Look at what's going on with Intel. Look at what's going on with all of these stocks that are involved in, all I need to do is I could go out and say, the Options Insider Radio is investing in AI, and Options Insider Radio would be worth 6x by the end of the next month. Mark, I could make you a billionaire.
Conservatively.
We just need to get you into artificial intelligence in podcasting. And the next thing you know, you'll have multiple bidders. It'll be and instead of your voice, it'll be some computer generated Mark Longo hosting all of the podcasts.
I think Stephen Hawking might be available for that role.
Yeah,
I hear it's pretty good for computer animated voices. But you're right, it has the whiff of something about it, Mr. Tubb. Maybe who knows if it's a takeover or what it is, but you don't see these kind of call paloozas. I mean, it could be some funds deciding they need to get some deltas in this name, but then you got to question why they're up to that. And then the execution is also weird enough that it was staggered enough throughout the day. Usually it's some fund that needs some deltas, they kind of go up relatively close to each other, not hours apart. So all of it kind of was interesting. It seemed like collectively everyone has kind of had to have some upside today in good old AMAT. Let us know your thoughts. AMAT, kind of old school, like Mark's saying, man, a lot of these old school names, my old stomping grounds of Intel. Everything old is new again. Microsoft's got a little bit of bloom on the rose again, at least from a vol and earnings movement perspective. So who knows? Everything old is new again. Speaking of everything old, let's get into some funky, weird rolls to wrap it up here. We're going to drop off our last spot here on our Odd Block tour for today. Is going down to Mexico. We're going to the iShares MSCI Mexico Inverse Market Index ETF. Say that 5 times fast. EWW is the ticker out here. 52.44 off about half a buck or nearly 1%. On today's action. This is a name that does about 7,700 contracts a day, doing a little bit more than that today, doing about 88,000 contracts. Pretty even, 1-to-1 puts over calls. You'll see why that is in a second, because that's pretty much exactly what we saw. We saw some rolls, combo rolls, call them what you will, a little bit of synthetic stock replacement rolls, all kinds of ways you could parse this bad boys. But effectively what we saw was the No 53 combo going up against the OC 56 combo 11,000 times. So paper coming in, selling out the OC 56 puts, buying the OC 56 calls, doing that 11,000 times, doing that for, it looks like 318, and then coming in on the No 53 combo coming in, and also, interestingly enough, selling out perhaps the puts, doing those bid side, lifting above the offer on the calls, which also makes this funky because the execution seems similar on both sides. Usually if you're going to roll that, it would be, you'd roll it the opposite way. So that's interesting in and of itself. Also interesting of note, a lot of size open in October, as you might expect. You think they want to roll this position out, but there's also some size open, a fair amount actually, on these No 53 puts. 13,000 actually already open on this strike, which is exactly as many as the OC 56 calls. So a lot of things have weird rings to this one, which is kind of interesting in and of itself. Again, looking at a good old EWW, what it's been up to for the last year. It's been an interesting roll. It kind of got pretty high, got up to about 52 or so. Then it sold off towards the end of last year and dropped back down to about into the low 40s, almost broke the 40 handle at one point, before it turned around again towards the beginning of this year, and it's kind of on a nice big rally ever since. Got up to about 57, and it seems like it's kind of bouncing off that high a little bit right now, coming off that over the last few months here. So interesting stuff. I don't know, Mr. Tubb, I'm sure you did a lot of rolls, a lot of combos, all kinds of fun stuff out there in your many, many years over on the SIBO. What is this one? What does this give your spider sense on this one? Because it's funky for all sorts of ways. If it's a roll, it's not really the right way. And then also the OI on the second leg of the month is also kind of funky. What does your spider sense tell you on this one?
Boring, sadly. My guess is this was exactly what you said with stock replacement. This is probably an institution doing a RevCon in October, closing that one with the stock $3 or $4 lower, rolling into November at the same price. I mean, not the same price, but rolling in the same quantity in November. These things tend to really jack up volume numbers and really get people excited. But amazingly, these things trade quite heavily all the time. And we used to be one of the largest brokers of these trades on the floor. There is some interesting paper here. You've got another 5,000, it looks like, of the 50-55 combo that might have traded. That's different than the 11,000 on four ways. But I think the majority of this volume that you're seeing in this stuff is probably just the RevCon with institutions borrowing stock and loading stock.
The fun days of rolling your synthetic stocks, aka nice little stock swap. This stuff goes up all the time, as you were saying, Mr. Tubbin. I like to point it out every now and then. We don't get a chance to talk about it that often. And you're right, usually it is kind of boring. This one has a few more wrinkles to it than your normal roll, which makes it a little bit more interesting, I think. Mr. Meatball, any thoughts here before we keep on rolling into our Thursday strategy block?
Yeah, it's amazing. What percentage of the business is just RevCons? It's a lot bigger than I think people realize. The use of options as a stock loan vehicle is, I think, an underreported and underappreciated piece of our business. I would venture to say that between collars, risk reversals, and RevCons, you've got, at least in the equity space, 60% of the volume, the balance being stock replacement via call spreads or via call spreads or put spreads instead of just owning the stock. I mean, it's just amazing how much of our business is directly tied to just people doing things with the underlying itself. There's very little just straight, Delta One trading or, just naked call buying, naked put buying. It gets all the sizzle. It gets that type of paper is dancing under the disco ball. But, the real power is in all the wallflowers that are hanging against the wall that are these 50,000 lot or 100,000 lot reversal conversions or collars or risk reversals.
The dancing under the disco ball. I like that too, the RevCons. If you're concerned, listeners, that it's some new emerging wing of the conservative wing of the Republican Party, nope. It's just reversals, conversions, all that fun stuff we talk about. Not that often here on the show because, as Tubby said, it isn't always that exciting. You're just pretty much just swapping stock for synthetics and vice versa. But every once in a while it goes on, interesting ratios. We like to bring it to your attention. That's what we do here on the Old Outbox. Speaking of bringing things to your attention, it's Thursday. Uncle Mike is chomping at the bit. It's time for some strategery. Yes, it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. Like the man said, this is the portion of the show where Uncle Mike takes the reins, dispenses some wit and or wisdom. Uncle Mike, I got a bit of a hankering today to talk some verticals because, sometimes you put on a vertical and it goes your way and you're super happy and you're dancing under the aforementioned disco ball, as Meatball said. And sometimes they don't go away and then you have a sad emoji face for the rest of the day. So what should I do in those scenarios, Uncle Mike, where I got that sad emoji staring back at me and I'm not dancing under that disco ball anymore?
Well, as much as I'd like to talk about RevCons and conversions, reversals, and box spreads today, I do think that there is more of a need with our audience to kind of go through what to do when a vertical goes against you. The reason I'm bringing this up today is because I think this is something that could be relevant to a lot of our listeners. When you sell a vertical call spread or a vertical put spread, oftentimes retail clients do it just a little bit out of the money. And when doing so, the goal is to collect some type of an income. Now, we've talked about on this show, there is no such thing as just a free credit by any means. But oftentimes the mentality is that, okay, I'm going to sell this spread and I'm going to get a credit for it. I get money put into my account for me just for taking on this risk. It's easy money. But it's not always easy money. It's very hard, easy money, in my opinion. But with that being said, I want to talk about and emphasize the importance of having a plan for when the trade does go against you. Now, let's say that you are selling a put spread. XYZ stock is at $55 a share, and typically you would do maybe a 50-45 put spread and get a $1 credit for it. Well, that's probably not existent in this market just because the volatility is so low. Now you would probably have something along the lines by comparison of maybe the stock would only be at 51 and then doing the 50-45 put spread to get that dollar credit that you're looking for. Now, how do we manage this? What's the way with which to do this? Because here's the concern that I see, especially in this market, where if you're still selling verticals, you're probably doing it closer to the money than you normally would because of the fact that the VIX is so low. Maybe not in all cases, but in a lot of underlyings, you probably have to do that if you want to stick to a similar strategy. What do you do if it goes against you? Now, here's the concern that I have when people sell out of the money verticals. Strategy works phenomenal for the first 2 months, 3 months, 5 months, 6 months, but there's always that month, no matter what, that it goes against you. And when it goes against you, if you're just someone who likes to set it and forget it, and not be prepared for it, then it's going to be a very rude awakening. If you are a new vertical spread seller and you've had your 8 months of success, which it seems a lot of vertical spread sellers seem to get in this business, and you're on month 9 right now, maybe it's going against you, whether it's a call spread or a put spread. First thing that I'd like to encourage you to do is understand that you've made some pretty good money for the first 8 months, and this is just a setback. You're still profitable. But the second thing that I'd like to emphasize is, what do you do if it goes against you? Because as you're seeing right now, it's going against you. Now, here's how I like to do a vertical. Let's say that I am selling a put spread or a call spread for that matter. Don't do too many call spreads. Sometimes I'll combine them with stock, but don't do too many call spreads independent of the another trade. But let's just say that it's starting to go against you. And I initially took in a $1 credit for a 5-point spread. So that means my risk is $4 to make $1. What I typically like to do as a benchmark is, as soon as I am losing $1 in the trade, that's when I want to get out of it. And I can't say it's that way every time, but that's, I think, a very good general rule to start with verticals. And the reason I say that is that I don't like risking more than what I'm trying to make typically. And so if you get to the point to where you're out $1 on this vertical, well, it's not fun by any means. And where's your gain of $1 every month? I'm not in this to lose money, Mike. I'm in this to gain. Well, here's the problem if you hang on to it and it goes against you. If you hang on to this vertical and it continues to go against you, you're going to lose $4. And by losing $4, it's going to take you 4 months to get back to where you were if you're doing this on a monthly basis. However, if you're only down $1, well, that's bad. It's not good by any means, but it happens. There's not a trader on the planet who's ever been totally undefeated, to my knowledge anyway. And so by getting out at a $1 loss, you only have to get $1 of gain, and you're back to where you were in 1 month or 1 week or 1 day, the way that options trade in this day and age. So my point is that have a stop loss, maybe not necessarily a stop loss, but just have a plan to exit the vertical when you lose the amount with which you were trying to gain. Now, yeah, there's going to be times to where you get out of it, and then it starts going your way right when you get out of it. But there's also going to be times where it continues to go against you, and you're going to avoid that loss. So my advice for managing vertical spreads would be to get out of them when you are in the losing category by the amount that you were trying to win for that specific month. I can't even tell you how many times I've had people call me and say, yeah, I sold this 50-45 put spread, and the stock's now down at 38. And what can I do with that? And so I have to politely say there's really nothing you can do. You should have done something a long time ago. It's like going to the doctor when you're already have a terminal illness of some sort, and you already know it and haven't done anything about it. So I would encourage you, put some risk management in your vertical spreads.
I like it, sir. Going to the dark side of verticals. And we got a couple minutes. Let's go to a couple of dark side of your emails with, and of course, your social posts with some mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's dive right into it. We asked you guys last week, everyone was talking about GM last week and how they were going all electric, so everyone had electric cars on the brain. We said, hey, you all got electric cars on your brain. How are you playing that pending shift to electric with your options trading? Are you perhaps selling some Tesla puts or buying some Tesla calls? Selling some GM puts or buying some GM calls? You saying electric cars are a fad, or you got some other choices in there? And pretty much overwhelmingly 67% saying they're selling Tesla puts, and probably a small fraction of that are buying the calls. 18% saying electric cars are a fad. Let's get on the Uncle Mike tip there. Only 10% trading GM. So all that interest, all that love, all that paper going up in GM. Not you guys, apparently. No love there. 5% coming in other. This week, we asked you guys, earnings season is almost upon us. What's your favorite way to trade earnings using options? And if you got other alternatives that don't fit in here, hit us up. Let's see. We gave you selling a straddle or a fly or an iron condor or an iron fly. I should put iron fly. You can't really fit all that stuff. So hopefully you assume that's what we mean. Or you could be buying that straddle / condor, or you could be just selling puts or put spreads, or buying calls / call spreads. So pick your poison there. Let's start with you. Let's start with the Tubinator. What is your call, and then what do you think our audience is choosing?
I like to buy straddles. I like to buy condors in these. It's kind of a cheap way to play the big move if you're looking to play the touchdown game. I think that's an easy way to get in. Unfortunately, I didn't take Mark's advice at his seminar 2 weeks ago on my Tesla Condor when the stock decided to tank $14 last, like 3 or 4 days ago. I probably could have taken my put spread off, and I went, wow, that's an odd move. And the next day it went back up $14. So when Mark says if you got a profit in one side of a condor, take some of that, roll the other one for free at least. Don't get too greedy and try to go for 2 days. But I do like, some accounts as a retail guy like myself, selling that kind of thing can be a little expensive marginally. So for me, it's buying condors.
Buying Condor. I thought you said buying straddles at first. I was like, oh my goodness, Tubby. Did you not see a million straddles, long straddles decay into your face on the floor? Condors, at least I understand what you got there. Mr. Meatball, what say you, sir? And more importantly, what do you think our audience is saying?
Well, as you know, I think that playing earnings is for chumps. But when I do, it's usually related to, when things will actually get mispriced, sometimes will be based on order flow, and that can pull skew out of whack. And in that case, I'll end up with some sort of iron butterfly or, something along those lines where I'm either, generally when I do play earnings, it's from the long premium side, not from the short premium side. But there's usually something sold against it. And as for our audience, I am certain they are premium sellers. I'm going to guess straddles, butterflies, condors, sellers, because that's what, a lot of the know-nothings go out and teach.
All right. Let's see. We got all kinds of choices here. Uncle Mike, what are you feeling? What do you think our audience is feeling, sir?
I would agree. I would say that our audience is premium sellers. For me personally, I typically don't play earnings, but I will hedge into earnings. And if there is low volatility hedging into earnings on a stock that I own, then a lot of times what I would do would be along the lines of a back spread. So that's what I do. But since that's not a choice and I have to pick from the four, I'm going to be buying call spreads.
Interesting. Uncle Mike, kind of surprising that I thought our audience was deep into the premium selling mode as well. But this week, Uncle Mike, winner wearing chicken dinner, 38% saying buying calls / call spreads. That surprises me.
Oh my!
I am a little bit surprised with that, I must say. Again, it's only been, we still have another day or two left. People have to, maybe everyone hasn't cast their vote yet, shall we say? Probably not, I'm guessing, because I got to imagine those numbers are going to change. 28% saying selling puts or put spreads. 24% saying selling from straddles, flies, or condors. Only 10% in the old Tubby camp buying straddles, flies, or condors. So there you go. We got about a day or two left. If you haven't voted, get in there. Get those numbers moving a little bit, because I can't imagine 40% of our audience is out there. You never know. You never know. We've seen crazier things. Meanwhile, though, it's time for us to keep on rolling into what we see that's crazy for the rest of the week. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is, as the name said, the portion of the show we tell you what we're watching for the rest of this week. Let's go back around the horn the other way. Let's start with ye old Uncle Mike. Uncle Mike, what you keeping an eye on for the rest of this week, sir, into the old weekend?
Everything macro, as always, and just trying to see how the market will continue to not react to everything macro.
I didn't know you were channeling the Viceroy, sir. Well done on your part. Mr. Meatball, same question for you, sir. What is catching your eye? I'd imagine you're pretty fixed like the Eye of Sauron on those VIX futures.
VIX futures, then we also have a lot of earnings starting to come up. You know, we had some bank earnings today. We get a swath of earnings next week, and then we get all the big tech names the following. So, there could be, while the S&P itself might not do very much, there could be some action on the individual names. I think there's plenty of room for some interesting names to throw themselves around. IBM was one that I'm interesting. Every AI company seems to be able to make money or to rally on AI, except for the group that invented AI, which is IBM, and that's because they're horribly managed. So it just goes to show you that great technology and bad management equals a stock price that drops, not a stock price that pops. Whereas a company that is maybe later to the party but has the sizzle will rally, and that's what we saw out of your NVIDIAs and your Intels and you name it.
How many times have we seen that play out in the tech space? I mean, Xerox created the modern, Windows and computer interface, and Microsoft and Apple, profited off that, not them. So it happens. Not just the better mousetrap. They don't always beat a path to your door, unfortunately. Last but not least, the Tubbinator, sir. What's catching your eye for the rest of this week, sir? Mr. Tubbinator, are you still with us, sir? I think you're muted.
I'm there. I'm kind of like Mark on this one. I've got an eye to the sky, like Mike does in the macro sense, but kind of just seems like everything that's said in Washington doesn't really mean anything. And I think we're really going to be looking at earnings, odd flow in some of these stocks, and see if we can, pick up any trends along the way. I just don't see. I think banks were the leading candidate to move stocks even higher, and even with good numbers, we've seen that a lot of the banks have already had some big run-ups, and maybe the stock market's kind of certainly not topsy-turvy by any means, but it's kind of out of gas a little bit here. So I'm looking at individual stocks and see if we can't pick off certain moves, whether there's news, rumors, or earnings abound.
Unfortunately, time does not abound. We are done with this episode of the Option Block. But before we go, let's go one last time around the horn. See what everybody's got cooking up that may interest you. Uncle Mike, we'll start with you. I hear tell, sir. I hear rumor that you maybe have a little fund you got going on. What's cooking over there in the land of Uncle Mike, sir?
The SKU Fund, if you are interested in possibly getting a little bit more than a savings account and having a very well protected risk, give me a call. I've been doing this for clients. In fact, one of them even called me Dr. SKU this past week. It was very exciting. Feel free to contact me. I'll charge 15 basis points for it. I am at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
Uh-oh, Dr. SKU is getting perilously close to Russell and his Dr. Vicks over there at the SIBO. You may be getting a cease and desist letter from his lawyers anytime, sir. So watch out for that. Speaking of which, Mr. Meatball, what's on your radar for the rest of this week? Or we already talked about that, but also, what do you guys got cooking in the pit?
You know, just Andrew and I have been blogging every day again. We had gotten out of the habit. So in the mornings, we're putting out a kind of a daily rundown of what's going on in the markets. In the afternoons, we write up a blog about something that's interesting. So go to optionpit.com/blogs and read our blog every day. It will make you a better trader.
There you go. Read it every day with your cup of coffee in the morning, and it will keep you in the know. And one day they'll bring back that super exciting Row webinar they've been threatening us with for so long. Optionpit.com, of course, to learn more. And last but not least, the Tubbinator. Sir, anything cooking in your neck of the woods that's of interest to our audience, sir?
Oh, I can't say much yet, but I'm going to just probably leave it on a cliffhanger and say news pending.
So you're saying you won't be man about town for much longer?
No, my wife's going to kill me if I don't get out of this house. So,
but you're in the pool house, so you're already out there in your own neck of the woods.
I am, but she works from home, so she's already she's got me 1 foot out the door already. So we'll leave it at news pending, and hopefully we'll have something the next week or so for you.
Most men have a man cave. Mr. Tubby, he has a man pool house. So to each their own. And on behalf of the Tubbinator and Uncle Mike and the Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing. Keep those questions coming. Don't worry, we'll get to more of them on Monday. We'll see you then for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.